Well, it's been a crazy couple of sessions for the markets. Global markets, though, we should say, at least for now, have calmed down amid a breather in the political crisis that's happening in Italy. Now, populist parties there are making an 11th hour push to form a coalition to avoid early elections that would have been July. That sparked a rebound in stocks. The Dow gained more than 300 points yesterday. And as you can see, futures today up slightly. So we're not looking at a big sell-off. Also, though, there are reports that the U.S. is moving ahead with tariffs on European steel and aluminum. That could actually rattle the markets again. Let's bring in Gary Smith of Kadina Group and Joseph Sroka of NovaPoint Capital. Guys, good morning.
Good morning.
Good morning.
Gary, let's start with this trade war. Are we now out of the woods of a full-blown trade war, or are we about to walk into those woods, considering that Wilbur Ross has made these comments that he's kind of hinting that we may actually start to impose these tariffs on the EU in particular?
That's the best question of the day, Cheryl. Here's the reason it's a great question. One, yes, this could certainly escalate from steel and aluminum across the board. Why Trump wants to bring the EU into this boggles the mind. I understand China, maybe from the intellectual property aspect. Now, on the flip side, Trump is the quintessential, a fire-ready aim person. Talks a big game up front. We've seen that from everyone from China to North Korea, and then in the end backs down. I hope it's the latter. If it's the former and this escalates, oy.
Joe, I mean, this is the hard part for investors because you've got this new news that and we may actually learn today about these tariffs on the EU from the U.S., and it's looking more and more likely if you look at the Wall Street Journal this morning. You've also got the situation with China. That is not resolved. You've got, let's not even talk about North Korea, and then you've also got NAFTA, which continues to be in jeopardy, and the sides seem to be once again further apart on NAFTA. So all of this, is this precarious for an investor as they try to kind of navigate what their portfolio is going to look like this year?
I mean, mainly it's noise. I don't think the administration wants a trade war with anyone. They're certainly willing to have some skirmishes here and there to test their boundaries and see what concessions they can get. But GDP growth is going to be solid in the U.S. here in the second quarter. Corporate earnings have been good. We're going to have double-digit earnings in the S&P 500. I think investors should filter out the noise and focus on earnings and capital appreciation in their portfolio's.
Yeah, to pick up on that, Gary, you have to wonder if the Fed is going to be our best friend over the next few months because they've kind of given us very tempered, moderate language about rate hikes.
Look, I totally agree. The economy is in good shape. Earnings are in good shape. But, maybe I'm being a bit pessimistic. The recent report just on the steel and aluminum tariffs could cause a decline in GDP by 0.1%. That's just steel and aluminum. Yeah. So I guess maybe I'm always looking for the next black swan or the next blow up out there. So far, things are good. But as we've seen, even what I thought was a small thing with the Italian bond market, what were we down at one point? Like almost 500 points? Yeah. So the market is, I kind of on a real tightrope right now.
We're jittery. No, that's true. And, the VIX, the volatility index, the fear gauge, if you will, has kind of reflected, right now we're kind of, there's been temporary spikes. We're okay right now in the VIX. But let me turn that over to Italy and Joe, because right now that was a very, to Gary's point, that was a pretty big fall off on just concerns about a populist movement in Italy. Not a big surprise. We've gone through this with the UK, but we really blinked as investors.
We did, certainly, to Gary's point, maybe there's a black swan event always lurking out there, and investors don't know what it's going to be or when it can come. So when they see bad news, and then especially sort of amplified by program trading, you're going to trade first and then really synthesize the news later and make smarter investment decisions on the back end.
Yeah, well, calmer heads hopefully will prevail, at least on the investment side. Not sure it's going to be on the political side, but that's the world we're in. Gary and Joseph, thank you guys. Appreciate it.
I love that. Smarter decisions on the back end. Makes sense to me.